Hi, my name is George Sakalidis. My company is Magnetic Resources out of Perth, West Australia. We are a gold company. We've discovered close to 2 million ounces in probably the second biggest field in West Australia, and it's still getting bigger. So it's a very exciting time for us.
George, lovely to see you. Thanks very much for coming on the show and the platform. We've not met or spoken before, so can you give me a little bit of background on yourself? Where have you been before? Relevant to what you're trying to do today?
Well, I'm an exploration geophysicist. I've discovered many different, deposits, gold, mineral sands, and other commodities. I've actually run listed companies since 2000. And the current company is Magnetic, but I've actually been involved with 4 other companies in that period.
Okay, and with regards to let's talk about where you're at with the project. You say it's obviously quite big, and you just put out some quite nice drill results. So maybe start with what was the idea when you started off with this company, and where have you got to today?
Yeah, in 2017, we picked up land at Laverton, West Australia, which is about 300 kilometres north of Kalgoorlie. It's probably the second biggest gold field in West Australia. Kalgoorlie is the biggest. We didn't have anything to start with. We pegged the land, and then we acquired a bit of extra land. And in that period between then and now, we've found 3 deposits from drilling, intensive drilling. We've spent over $20 million at a discovery rate of $9 per ounce, which is extremely good. And that's really the story. But initially we didn't have anything. We worked it out step by step. And then we found the first deposit. About a year later, we found the second, and the third, which is always the biggest, came about three years ago.
Right. Okay. And with regards to what are you up to today? You obviously put out some drill results now. Is the idea to just keep drilling and make this thing bigger, or are you going to kind of get into the kind of development phase?
Look, we've done a lot of drilling now. Basically, in total, there's 170 kilometres worth of drilling, about 1,900 drill holes. So, yeah, so we haven't reached the end of our drilling, but we've done most of it. Some of the drilling intersections we've been putting out are infill drill holes to ascertain how high is the grade and how thick are the zones. And you can see from the announcements we put out, the thickest zone was 76 metres at 2.5 grams to 24 metres at 5 grams. So some nice thick intersections, which is really the main thing about this deposit. The Lady Julie North 4 deposit is a deposit, and that deposit is currently sitting at 1.5 million ounces. But with all the extra drilling, we'll be doing a resource upgrade, and that resource upgrade is due in January. It will get much bigger, but I don't know the exact amount. The grade, I believe, will probably get better, but we have to wait for the numbers themselves. There's another 3 drill holes to be input into the database, and then we'll calculate the numbers. That will be used to do a feasibility study. So we're expecting to have that out probably by March, and that will include an open cut and an underground, because the material that we're finding actually goes down to a kilometre down dip. So we certainly have an open cut and an underground sitting in there.
Okay, so that's pretty quick in terms of the feasibility component there. Tell me a bit about the team, because obviously it's been all exploration up until now. Have you been building up a team, or have you guys got experience with regards to moving it through the economic study phases?
Yes. What we've done is we've hired a group who's that's their main thing they do is help companies get it to pre-feasibility and feasibility stages. They're experienced miners as well, so I use their help. They're consultants to the company. So basically, we've been running it from here, but the main game is in the field, doing the drilling and also doing the feasibility in parallel.
Right. Okay. And if you will you continue? Because obviously drilling's expensive, right. Will you continue with the drilling after the feasibility is done on some of the other projects, or would you now sort of move into a sort of proper sort of economic phase to what you've got?
Look, I think where we're heading is I haven't actually run through some of the detail, but we happen to be next door to some big miners with big processing plants. Their processing plants short on inventory. One of them is just started their processing plant. The other one's working with less than half capacity. So we actually have a data room open to them. So we're not afraid of M&A, but at the same time, we're moving this into feasibility. Also talking to banks as if we're going into production. So there's like a two-path prong happening here.
Right. And when you say M&A, do you mean at an asset level or a corporate level?
We don't think it'll be asset level. We most likely be at a company level, but, we can't predict. We can get people to start mining, but, the interest would be from the companies next door who have the big plants and running out of feedstock.
Yeah, it would make a lot of sense for you. And,
one of them's only 10 k's away, and the other one's 15 k's away.
All right. So, wow. Okay. And so who are they? Who are those companies?
Well, there's one called Goldfields. They have the Wallaby mine and the Granny Smith processing plant. And the second is Genesis, who have the Jupiter mine and the Mount Morgan's processing plant.
Right.
There are other players as well, but they're quite a bit further away.
So a bit of competitive tension. You're not sort of held ransom by one. Okay, that's good news. That's good news.
Yeah,
okay.
we built the asset up to a point where it's standalone anyway.
Right, but obviously using someone else's Capex and infrastructure is going to be a lot more economic, higher margin for them. Okay, so everyone's a winner. Okay, so and how are you for money to actually take it through to the end of the feasibility study phase?
Yeah, we've got 12 million in the bank, so we can clearly complete the feasibility. We've spent most of the money already. We actually have $1 million allocated for legal fees in case there is a bid, so that's sitting there as well.
Okay. So cash is good. And if you did go down the other prong, I think companies always have got to at least say they could, if they needed to, go and finance this yourself. I mean, what's the mood over there at the moment for financing gold projects in Australia?
Well, I think it's pretty good, especially for the gold companies. I gave a presentation at Diggers and Dealers, the main conference in WA or in Australia, and the bankers were clearly interested. They liked the story, and this thing makes a lot of money. It's the second highest grade open cut in West Australia, close to 2 grams per tonne.
Have you got? So can you give me a sort of sense of the pre-feasibility numbers or equivalent? I know you're doing new fees, but what do they look like before? Yeah,
we did it at 3,200 Australian dollars. So currently it's 4,100. So it's $900 higher. But when we did it in August, the NPV was 925 million. The EBITDA was 1.4 billion. Payback in 12 months. Internal rate of return 135%. Some extraordinary numbers, but the gold price and the higher grade makes numbers so good.
So what did you say what's the production level? How many ounces a year?
About 105,000 ounces for about 8 years. And that was just the open pit. Subsequent to August, we've been drilling out the underground, and the underground has become almost as big as the open cut. And so we're now incorporating the underground into the feasibility. So the economics will be far better, and we're looking at 150,000 ounces plus per year.
Right. Okay. Well, that is good news. But if just looking at sort of what's happening in the market, people are maybe expecting you to potentially go and do a raise because you've kind of come off from, I guess, mid-year highs. That kind of valley of death that sometimes developers go through. What's your message to shareholders about what next year looks like?
Look, the 12 million we have in the bank is actually enough for what we've been planning. We're not planning holes past a kilometre down dip. And if we did do something, it'd just be, a couple, it gets a bit expensive. So the only time we would raise significant funds is if we were building the plant. We need to raise both equity and debt. So we're not quite at that point, but we are talking to banks as well. So there's two streams. One's going to banks, raising debt. There's large sums available. We've seen big raisings recently, 220 million by a company moving into production. So there is funds available for the better projects.
Right, but you obviously as explorers predominantly, have you got the stomach to actually go and do a build genuinely? Because a lot of companies I speak to, with prices like this, with margins like we're seeing right now, people are thinking, well, actually, there's a lot of upside to be had here. Or would you feel more comfortable, getting into some M&A process and just negotiating hard?
Well, the M&A process is something you can't predict. Okay, so we think most likely it will happen, but we don't know for sure. When it happens, it happens. So, like I said, this project makes a lot of money. So we're not scared to push it into production. At the same time, feasibility will give us an idea on the valuation of what we actually have. So if there is interest, we can look at the numbers, which will be available, and we can have a look at the offer at the same. If they're not good enough, we just go into production.
Right. Okay. So, and just to understand the kind of the phasing next year. So if we look at feasibility by the end of Q1, say, if you were taking it forward yourself, you would continue to try and understand the economics better and maybe get into some feed and FID process by when? So give me a sense of what the timing of both routes for you.
We're thinking that if we can get the banks or the bank aligned, we're talking in the first quarter. Okay, so we've done a lot of work to get it to this point.
Okay. What's it like in Oz? I mean, obviously West Australia, great mining jurisdiction, but presumably in terms of all that kind of environmental and social license and so forth, is all that taken care of?
The environmental we've completed. Native title agreements are the ones that we're working on now. There's a process where we've negotiated or tried to negotiate. If unsuccessful, you go to an arbitration process, which is meant to come up with a finality within a 6-month period. So I guess the banks won't be providing finance unless they can see the agreement completed. But I think most groups have experience with the various, native title agreements. So once we've completed that, then it'll be ready to go.
Right, and what are you looking at in terms of total Capex on this, based on your existing numbers? Obviously, you're going to revise them. But
the Capex was just for the open cut, so we're introducing an underground. So the Capex will be between 150 and 200 million. When we looked at the numbers and their effect, it doesn't seem to affect the NPV to a dramatic extent. So even if we increase the NPV, increase the Capex, the NPV still stays very strong.
Yeah. Okay. So it's relatively kind of quick build timeframe as well. It's rather sort of simple open cut, and then obviously the underground will be what the underground is when it tell us about that. So
the open pit currently goes down to about 320 metres.
Yeah.
And below that, we see a continuity for another 600-700 metres for the underground.
Right. So the whole thing seems quite cheap. You obviously, looking at who's around you, there's obviously a lot of infrastructure available in terms of energy, water, etc. It doesn't add much to the bottom line in terms of costs.
Yeah. Okay. There's actually a gas pipeline that's used by our neighbours, so we'll be able to tap into that. When we're only literally 300-400 metres south of the old Laverton road, which is a road used by all the mining vehicles. So we don't have to build major roads or anything. So we're right amongst where the companies are in production. So, the access roads are all there.
Okay. Well, look, I think that's a good start for me in terms of trying to understand, what you are and what you're about, and also timing. Very interesting indeed. Look, okay. Well, look, I appreciate your time, George. Let us stay in touch. You've obviously got a big Q1 coming through, some big announcements in there. People can understand what what the cost of this could be and what the options available to you are. So, have a great Christmas.
Okay, thank
and
you.
We'll see you in the new year.
Thank you. Thanks again.